I want to share with you the power of EBP model using my EBP indicator. Before we look into these trades, let's look at the context behind why these would have been great EBP setups. So going back to last week's price action, what do we have? We do have this intact 4-hourly fair value gap that hasn't been tapped into. And we have all these external range liquidity waiting to be taken. At the same time, price has been consolidating for the whole week into this range, where every time price tries to break outside of it, it gets rejected and pushed back into the range. And every time that happens, it fails to take that external range liquidity, forming all these failure swings where we have this nice low resistance liquidity. If you look back at the weekly candles, you can see that we have been in a bullish trend where last week has closed bullish as well. And our expectation for this week for price to also close as a bullish candle. What has happened? On Friday, we anticipate to get, thank God it's Friday setup, where Friday has swept previous week's low and then it pushed with urgency to close above Monday's open price, ending the week as a bullish candle. Once that happened, we've managed to take some of these failure swings, but at the same time, when Friday has closed, we have created this relative equal highs, which is a great target for us when we come to this week to use as targets. However, on Monday, we immediately opened and pushed, flushing through that external liquidity and tapping into that 4-hourly fair value gap, completely filling it, and immediately price started dropping lower. What do we have in this case? We have formed this dealing range from this high to this low with our 50% level is there. Price has dropped below the 50% range into the discount. What do we have at this discount? We have this PD array, the balanced price range, where price came into it and immediately with urgency, it started to push higher. As Wednesday opened, if you have the EBP indicator and you have toggled on the alerts, you would have been notified that we have a very nice EBP forming on Wednesday, and at the same time, it has confirmed the change in state of delivery, closing above these series of bearish candles. This gives us the confidence that this low is now protected and it's time for us to start pushing higher. Without us going to lower time frames, we can immediately enter this trade. And what I like to do is what we have on the EBP are these quartiles. So this is the 0%. We have 25% retracement, 50% retracement, 75% retracement, and 100% retracement. These divides the EBP candle into quartiles. And what I like to do most of the time is place my entry at the 25% retracement, have my stop loss at the 75% retracement. The reason being is that if price managed to get all the way down to 75% retracement of the EBP, it is more likely for price to take the low before it starts going higher. Or this will just invalidate this EBP and price would just continue going lower. So that's my invalidation level at the moment, is the 75% retracement. My target would be either 2R, but considering that this is almost near this high of week, which is my target for this week, I can easily have that to be my TP, where I get around 2.8 Rs. So looking at what happened next, price has tagged me in and immediately pushed higher. And as we go to that high, what do we notice? Change in momentum. Every time price pushes higher, the candle gets smaller, which means it's getting weaker. And that gives me the indication that possibly if price pushes beyond this, I would expect price to return into the range again before it continues pushing higher. So I can capitalize on that retracement before price starts moving towards the right direction. So then here I got my 2.8 R from this EBP. And then what happens next? If you come into the London Open, we have immediately taken that high. And what did we get? We have formed a nice bearish EBP. So we can look into trading this lower into any relevant PD arrays that are within this leg. So let's look at the ranges. So my target would most likely be at the discount. I don't want price to just come down to the premium level and then just push higher. My expectation is after this happened, I want price to come lower into the discount level, at least to the 50% level, and then start to push higher. What PD arrays do I have at this level? I do have this nice hourly fair value gap. And at the same time, this is the low of Asia, which I can also use as a target. So then, again, as I usually do, would place my entry at the 25% of this EBP and then stop at 75% retracement, which aligns with the open of this bearish candle. And I can target either 2R, or in this case, I can go ahead and target 5Rs, which is slightly above the Asian low and above that hourly fair value gap. Let's see what price does. Immediately triggering me in and then starts melting towards the target. We don't get any bullish candles. Price touches that low to the tick before it actually starts pushing higher. At this rate, I'm already out of the trade with 5 Rs and 2.8 Rs bullish to that high and then bearish.